Hello everyone, and welcome to another episode of Daily Gwei Refuel, where we recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 2nd of October, 2023. Alright everyone, let's get into it. So, this episode's probably going to be a bit heavy on the ETF side of things, because there is a bit to talk about. So as you guys know, there has been a lot of these Ethereum or ETH Futures ETFs being applied for and basically rushed through by the SEC, which is kind of funny to see for its own reasons. But essentially, a lot of these ETFs, these futures ETFs, which I think you can see the list here. Yeah, you can see the list here. A lot, if not all of them, should start trading today or tomorrow. Now, of course, these aren't spot ETFs, they're futures ETFs, so it is kind of unknown what effect they're going to have on the price of ETH. Obviously, the market was a bit hot over the weekend, but like that's not signal to me, to be honest. That's like a narrative trade. Not to say that I'm bearish or anything, but in terms of measuring the direct impacts of these ETFs on the ETH price, I mean, it's kind of an open question right now because, as I said, they are futures ETFs, they are derivatives, they are not spot ETFs, right? Where obviously spot ETFs are much more bullish. But I have said in the past how I think that spot ETFs, an ETH spot ETF is definitely going to follow, especially because the futures ETFs have been approved here or are basically going to get approved today or tomorrow and start trading. But other than that, I think the most important thing or the most exciting thing that I want to talk about was this announcement out of VanEck over the weekend. Now, of course, VanEck is one of the companies that are going to be launching an ETH Futures ETF, and they announced over the weekend that they are actually going to donate 10% of all of their profits from this ETF to the Protocol Guild for at least 10 years. That's crazy. Like when I first saw this, I woke up to this, I was like, holy shit, that's awesome. Because, I mean, it's awesome for so many different reasons, but I think for me, like immediately what came to mind was that, wow, we actually got one of these big TradFi institutions to be aligned with Ethereum to the point where they're actually giving profits to the Protocol Guild, which go back to obviously funding core developers and researchers. So essentially, one of these big TradFi companies is funding public goods on Ethereum using profits directly, I guess, made from creating a product that speculates on the price of ETH. And obviously, the price of ETH is very much dictated, at least long term, by the efforts of the core developers and researchers by upgrading the network, implementing things like the merge and EIP 1559 and everything else that goes with it, right? Scaling, stuff like that. So the fact that they were able to see that and put their money where their mouth was or is amazing to me. And not only that, I mean, they did this whole thread around this, and they basically explain what the Protocol Guild is, why they're bullish on it, why they want to actually support this, and they've mentioned some of the communities that are already supporting the Protocol Guild, and they're also doing a Twitter space this Wednesday, the 4th of October, at 1 p.m. Eastern time with the Protocol Guild to dive deeper into the topic. So not only are they giving money from giving profits from this ETF to the Protocol Guild, they are also getting more involved with the community by getting on a Twitter Spaces with the Protocol Guild. And I'm assuming Trent Van Epps and probably Tim Byko will be on there with them, which is just next level to me. And they also put out this tweet at the end of the thread here where they said, if TradFi stands to gain from the efforts of Ethereum's core contributors, it makes sense that we also give back to their work. We urge other asset managers / ETF issuers to consider also giving back in the same way. If this starts a trend, I'm going to be so happy because obviously the public goods thing is a very kind of crypto native thing. It's been very crypto kind of like centric, where we've had Gitcoin, we've had Optimism do their retroactive public goods funding. We've obviously got the Protocol Guild and a few other initiatives out there, but it's really been kind of like inside baseball. There hasn't really been outside entities getting involved with that, right? Maybe sometimes in some of the Gitcoin grants rounds, there was matching from some outside entities, but usually it was the insider kind of entities, the ones that are crypto native. Now, obviously, VanEck is not crypto native, right? It is for all intents and purposes, it is a TradFi company. They were founded in 1955, long before crypto existed. So for them to do this and signal alignment with obviously Ethereum public goods funding should, in my view, and hopefully in my view, encourage other companies to do the same. Now, of course, not every company has to do exactly the same thing here. They don't have to give 10% of their profits from their ETH products for 10 years to the Protocol Guild. They can really come up with whatever they want to. Maybe they just do a one-time donation to the Protocol Guild, or maybe they do donations spread out over time, or something like that. Like there's literally various different ways they can do things here, and it doesn't have to actually be just the Protocol Guild. They can support public goods in a number of different ways on Ethereum. But VanEck doing this here, I think, is just a brilliant marketing strategy as well, because I said in my tweet here, I said, I'm not going to be buying any of these ETH Futures ETFs. But if I was, I'd only buy VanEck's one. Like, why would I buy any of the other ones over VanEck? Like, all the other ones are still going to make profits off of me, but at least with VanEck, I know that 10% of those profits are going directly to the Protocol Guild for 10 years. So I would definitely do that and recommend other people do that as well. Like, if someone came up to me and said, hey, what, futures ETF should I buy for ETH? I'd be like, well, buy VanEck's one. And I would explain why, of course, but then I'd also tell them to do their own research about how the fund is actually structured, obviously, and what the fees are and stuff like that. But as I said, like, it's the only one that I would actually kind of like recommend over all the others, just because of that Ethereum alignment. And of course, I'm hoping they do this when they eventually get a spot ETF as well, because the futures ETFs, as I said before, like, they're not, a spot ETF, obviously no one crypto native is probably going to buy a futures ETF unless they're like a pure speculator. Like, I don't expect many ETH native investors to buy this unless they're trying to do some kind of tax advantage stuff, especially in the US with the 401k. But when it comes to like a spot ETF, that is something that's much more interesting to crypto natives, because crypto natives want to buy and hold the actual asset, right? They don't want to buy a derivative. So, and they want to do that in a tax advantaged way as well. So when the spot ETFs go live, then of course VanEck is going to be one of the companies applying for one for sure. I'm not even sure if they've applied for one yet, but they definitely want to have one. And I'm sure they would do the same thing with the spot ETF as they've done with the futures ETF. So again, I would say, if you want to buy the spot ETF, go ahead and buy the VanEck one. And also, as I was saying, the spot ETF is much more appealing to crypto natives, so they're much more likely to go buy that over a futures ETF. Now, of course, the ETF stuff, it goes way beyond crypto. ETFs are an incredibly popular product in the US, especially because you can access them in the tax advantage accounts, like the retirement accounts, and that's why it's such a big deal, because it unlocks so much capital. Obviously there are tens of trillions of dollars in the TradFi ecosystem just in retirement accounts and stuff like that. But if we're talking about the amount of money that could go into these futures and spot ETFs for both ETH and BTC, in my mind, it's in the tens of billions, at least, I think, over time. Like, obviously not all at once, but I guess we'll see this week what the kind of demand is for a futures ETH ETF, because they're launching today or tomorrow, right? But I'm talking over the long term, over the years. Obviously, if it's in a retirement account, you're planning to buy it for the long term, right? For decades long. Because that you definitely want that to appreciate over time, to access it when you retire, sort of thing. So yeah, just generally a lot of, I guess, like bullish, kind of a lot of reasons to be bullish here about this. But as I said, like, the VanEck one is the gold standard to me right now, just from that pure perspective of the fact that they're donating profits to the Protocol Guild. But in saying that, if you are planning on buying any of these products, please do your own research on each of them, see how they're structured, see what the fees are like. Don't just ape into it because they're supporting the Protocol Guild, of course. But as I said, that is like a huge plus for me and makes the VanEck one the gold standard for me. But it's pretty easy for me to say that because I'm not buying it. If I was buying one of these things, I would definitely go do additional research. But honestly, if VanEck's one wasn't appealing to me and other ones were, I probably wouldn't buy the other ones anyway. Like, this is not a product that really appeals to me anyway, like a futures ETF. I never trade derivatives or futures products or anything like that. I'm just a spot investor. I just invest for the long term on spot markets. But I also do that in my retirement account too. But I've done that not through an ETF product. I've done that by having a self-managed retirement account, and I just bought ETH with that and staked it. You guys know that. But yeah, exciting times ahead over the next few days. Let's see how these ETFs, when they launch, these futures ETFs, how they shake out, what the demand's like there. And I'm very, very curious to see now if we get a spot ETF sooner for ETH sooner than we otherwise would have. As I've said before, I feel like a Bitcoin spot ETF is locked in for Q1 at this point. It's a high likelihood to me that it's going to launch in Q1. It could still launch this year, mind you. It could still launch towards the end of the year or something like that. But the SEC has delayed all of them and have given themselves until January. I think that's the final deadline for one of them, and then March is the final deadline for pretty much all the rest of them. So yeah, if it launches in January, I wouldn't be surprised at all if they all get approved there. And then the question is, when's the ETH ETF going to be approved? Like, is it going to be in 2024, or are we going to have to wait for 2025? The ticker's already running, the clock's already running on a lot of these spot ETH ETFs that have been applied for, but it depends. We'll have to see what the timing's like. We'll have to see what the SEC feels like doing, if they're going to approve them or not. But that would obviously be hugely bullish as well. So I'll be keeping my eye on that and letting you guys know what happens there. But anyway, moving on from the ETF stuff to something out of Coinbase today. So Coinbase has been granted a full license in Singapore. So that means Coinbase will be able to operate out of Singapore going forward, which is a pretty big deal. And again, just shows that Coinbase is branching out from its US roots and trying to get presence in every country around the world, or as many countries around the world as they can. Of course, this is also something they've been wanting to do for quite a while, because Binance got a lot of market share in these markets that Coinbase wasn't in, and obviously Binance has been having a bunch of troubles recently for a little while now. I think ever since FTX blew up. Not that I think Binance is going to blow up like FTX did, but since FTX blew up, I think a lot of people, when it comes to centralized exchanges, have really reevaluated which ones they trust, which ones they want to use, and Coinbase to me has always been the gold standard. But unfortunately, Coinbase is not available in a lot of jurisdictions around the world because it has been very US-centric, and it's been a bit of a challenge for them to get these licenses. But it seems like they are expanding pretty quickly here. They're able to land licenses in places like Singapore, which is known for being a bit of a crypto hub there, and other places around the world. I'm sure they've been trying to get licenses there, and this is how they chip away at Binance's dominance. Honestly, like if you're in Singapore and you have the choice between like Binance and Coinbase, and you're worried about risk and the risks of using centralized exchanges, I feel like you choose Coinbase, especially because when you think about a lot of the assets that people want to trade, Coinbase has a lot of the assets, a lot of the most popular assets, and then the long tail of assets which Binance historically has been kind of the place to trade. A lot of that stuff just trades on chain now, right? It trades within DeFi, trades on layer 2s like Base, for example. So Coinbase doesn't really need to list these assets in order to expand into these markets. All they need to do is educate these markets about Base, their layer 2, or about layer 2s generally, and say, hey, we don't have this asset, but you can go trade this asset on Base, right? I don't know if they're legally allowed to say that, but I'm sure they could have some kind of page that basically hints at it or something like that. But yeah, if I had the choice, obviously, between Coinbase and Binance, which I do have the choice, but I use local Australian exchanges rather than Coinbase right now. But I always go Coinbase. Like, I've used Binance before. I've used Binance a bunch of times actually, but I've never kept any funds on there. I always withdraw immediately. Not that I think that Binance is insolvent or it's going to go under or anything like that, but when it comes to centralized exchange risk, I already don't trust any of them pretty much. But if I'm going to trust any of them to handle my assets, especially if I'm trying to like buy in size or cash out in size, I'm definitely not going to trust Binance over local exchanges that I've used here or something like Coinbase. Just for obvious reasons. I don't think I have to explain my reasoning there behind that. But great to see that Coinbase has gotten this license in Singapore. Hoping to see them expand to other countries as time goes on. All right, so Vitalik shared one of his very, what's the word I'm looking for here? Very interesting blog posts over the weekend, where he always poses these blog posts as questions, and this one is no different. He asked, should Ethereum be okay with enshrining more things in the protocol? Now, I've talked about this a bunch on the Refuel before, and about how Ethereum has this kind of minimalist or subtractive design philosophy where it doesn't want to enshrine too many things at the core protocol, and it wants to push them out to the, wider community to build them out. Now, of course, this is most obvious with things like layer 2s and LSTs and other such things like that. But the things that Vitalik focused on in this post specifically were a bunch of different things. So one of them was account abstraction. One of them, I think, was enshrining zkVM, so enshrining possibly a layer 2 in Ethereum, enshrining private mempools, proposed builder separation, liquid staking, and a bunch of other ones here. So if you haven't read this yet, I highly recommend reading it. But I think that the blog post leaves more questions than it answers, because a lot of this stuff to enshrine it is quite complex. And I think that reading through this, the only things that I actually thought were beneficial to enshrine was account abstraction or ERC 4337 or parts of it, as Vitalik lists here, because a lot of them are technical things like gas efficiency and code bug risk and stuff like that. And then, of course, PBS, enshrining PBS or proposer builder separation, because we've seen how crappy it is to have like MEV boost as like a sidecar solution to Ethereum rather than enshrining it. So those two things are the most obvious to me. Private mempools, it's a bit trickier to do. Definitely something that we would like to do, but again, trickier. Liquid staking, I honestly don't think liquid staking should be enshrined at all. I do like the fact that we have a vibrant liquid staking market, even if it is dominated right now by one player, obviously Lido. I still rather that than enshrining something at the core protocol, because there are so many other reasons why having the liquid staking be above the protocol than enshrining it than just technical. The social stuff is very important because you get projects competing with each other, and that makes for better decentralization and better node operator sets in my mind. Obviously, as I said, Lido dominates, but I feel like if we enshrined it, it would actually be worse from a node operator centralization perspective. I know that might be something that people don't agree with me on, but I do feel like it would be worse, because think about it. There'd be no motivation really for people to, I guess, like go to war essentially for their own favorite project, right? There'd be no Lido community, there'd be no Rockable community, there'd be no people like Diva and Swell and all these other protocols out there vying to get market share, right? So essentially, what would probably happen would be that the enshrined LST would get captured or basically coalesce around who makes it easiest to stake. Because, for example, decentralized exchanges would have access to the same LST, the same enshrined LST that everyone else has access to. So the differentiating factor just becomes how easy it is to stake. And of course, the centralized exchanges can offer the easiest staking experience possible. So I do believe that if we had an enshrined LST, it would have just been completely dominated by centralized exchanges, and it would have been much more centralizing than having a vibrant ecosystem of LSTs all competing with each other. And people will say, well, you'll have centralized exchanges that compete with each other. We already have that, and there's really only two dominant plays, Coinbase and Binance. Kraken is pretty small, actually. I mean, I think Rockerpool is almost bigger than Kraken. And Rockerpool is considerably harder to stake with than Kraken if you talk about scaling it, and it's not one click like it is with Kraken. I'm talking about being a node operator more so than just buying kind of like RETH, right, for example. But RETH demand is kind of, or RETH supply is constricted by node operators, and then it's constricted by and node operators are constricted by demand for RETH and stuff like that. There's a lot of complexities that go into it, right? So when you think about it like that, as I said, I feel like the core of the issue is node operator centralization, and what is the worst outcome? Enshrined LST or LSTs above the protocol? I feel like enshrined LST would be the worst outcome for node operator centralization. But I mean, it's kind of hard to prove that because we don't have an enshrined LST, but I think that we can maybe look at other networks to see what they've done. Maybe not so much with enshrined LSTs, but with things like delegated proof of stake, where essentially there is only a certain number of validators that are like the validators that people delegate their stake to, and they're not even, it's not even real staking in my mind, but like delegate their stake to, and there's no slashing or anything like that. There's no real punishment for anything going wrong there, and the economic security is a lot lower because of that, and then the centralization of node operators is a lot higher too. So this is a debate that's going to go on forever. I don't think we're ever going to get like a strong answer, but it's all about kind of what you believe. And what I believe, as I said, is that enshrining an LST would be more centralizing than the approach we have today. But also, it's impossible for me to prove that, so it is a belief there. But anyway, you can go give Vitalik's blog post a read for full details on all of that stuff. I'll link it in the YouTube description below for you to do so. All right, Devnet9. So Dencun Devnet9 is now live. You can see this screenshot from Terrence here that he's syncing Devnet9 with Prism and Geth. And if you want to participate in this DevNet, you can. There's the URL here, which I'll link in the YouTube description below. But from what I've seen, Devnet9 seems to be chugging along quite nicely. I haven't seen anyone bring up any major issues about it or anything like that. This is obviously a DevNet and not a public testnet, but you can see how it's been running. There are a few block explorers here as well as a blob explorer too. Obviously, because we want to be testing out the blobs and see how they how a DevNet would handle them, and then obviously how a public testnet's going to handle them later on. So you can go check this out. I'll link it in the YouTube description below. But I'm not sure how long they want to run this DevNet for before maybe spinning up another DevNet or moving on to testnets. I don't know if there's going to be a DevNet 10. There might be, but it might be really short-lived. I feel like they want to get to testnets as soon as possible. Obviously, they're targeting early to mid-November right now for the first testnet, and we're at the start of October. So I'm expecting to see more conversations around that pop up over the next couple of weeks on the relevant core devs calls. So I'll keep you guys updated on that. But for now, I think DevNet9 seems to be running well. I haven't seen any major issues reported. But if you have, please pass them on to me. I don't have an all-seeing eye, unfortunately. I just see what I see. But yeah, you can go check out this link. I'll link it in the YouTube description below for you to do so. All right, Ethereum.org is back with the second edition of the Ethereum.org Writers Cohort, which is a 3-week online writing program for everyone interested in writing about Ethereum. This will consist of weekly calls, 3 articles, and a community to help you along the way. So you can go to ethereumwriterscohort.co. Of course, I'll link that in the YouTube description below, but you can go here and apply by putting in your Discord username and your email. And you can learn more about what this is here. So really, I mean, if you're someone who's looking to give back to the Ethereum community or looking to get more involved with the Ethereum community and you're a half-decent writer, this is definitely the way to go, because Ethereum.org is the first stop for pretty much everyone that will Google Ethereum. Like, you Google Ethereum right now, the first result is Ethereum.org. I mean, I guess technically the first result will be some ads that pop up, but I've got an ad blocker, so I don't see them. So yeah, I mean, the first non-ad result would be Ethereum.org, and it's a huge site now. I mean, I've talked about before how Ethereum.org used to be pretty bare bones, but it is massive now. There is so much information on this website. I've just got it up on my screen right now. You can go dark mode here. I'll just enable dark mode to make sure your eyes don't get burnt out here. But I mean, you go to the top, use Ethereum. These are all different pages here. Learn about Ethereum, developer documentation, enterprise related things, community related things. There's everything here that you need to learn about Ethereum. And if this page doesn't have the full details on it, it usually links to another kind of website or page that gives you more details about this. So yeah, but anyway, if you're interested in being one of the names that writes the relevant things for Ethereum.org, the relevant articles for Ethereum.org, you should go submit an application to this. I'll link this in the YouTube description below for you to do so. Right, interesting tweet that I came across here from 0x Designer, who said Rainbow Group Wallet. So this is obviously the Rainbow wallet, mobile wallet here. But he's calling it Group Wallet, which is basically, it's a multi-sig, but he's calling it a group wallet. Now, I don't know why this has never occurred to me before, but this terminology is so much better than calling it a multi-sig wallet. The term multi-sig means absolutely nothing to most people. Like, if I said to my mom, oh, do you have a multi-sig wallet? She would have absolutely no idea what I'm talking about, right? If I say wallet, she'll know what I'm talking about. Maybe not in the context of crypto, but everyone knows what the word wallet means. Now, put group in next to that and say group wallet. People can infer what that means. They can say, oh, okay, a wallet shared amongst a group. Like, it's not hard to infer that, even if you have no idea what a crypto wallet is. But for someone to infer anything about a multi-sig wallet, you would already have to know what a multi-sig wallet is. You can't just come up with it. Like, I couldn't quiz someone on it that doesn't know what it is, and for them to just infer it or to assume what it is. Especially because I'm saying multi-sig, I'm shortening multi-signature, right? But even saying multi-signature wouldn't mean anything to most people. So I think that this is one area of terminology that we probably do need to change in wallets, especially, where we either call it like a group wallet or something else, but calling it like a multi-sig wallet probably isn't going to go over very well with the wider crowd. It's not going to lead to kind of like mass adoption here. Definitely not, because it's just a term that doesn't really mean anything on the face of it. And that's how all good kind of like terms are, I guess, created, where they actually do mean something on the surface, and people can infer what they mean. As I mentioned to you, you know, everyone knows what a wallet is, everyone knows what a group is. Put those two words together, you can infer what a group wallet means. Whereas people know what the word multi means, obviously, but no, like in the context of like multi-sig or multi-signature, like honestly, go ask someone that you know that doesn't know anything about crypto if they know what a multi-sig wallet is. They're going to be like, oh, I know what a wallet is, but I have no idea what multi-sig wallet means, right? And then ask them, well, what do you think a group wallet is? And they'll get that straight away. Like there's no way that they're not going to be able to assume what that is, at least in my view there. But it also extends beyond this, right? Like, a lot of the terminology that we use within crypto is not going to scale. Like even the terminology that people may think will scale, like layer 2, for example, that's not going to scale. People aren't even going to really know what they're using under the hood. They're just going to know the apps that they're using. For example, if you're a Uniswap user, right, you're using Uniswap, you're not on let's say Arbitrum. For mass adoption to happen, you're not going to know what Arbitrum is. You're not going to know what Ethereum is. You're not going to know all the little intricacies of like what standard your token is using. You're not going to know what an ERC20 is or what an NFT standard is. You're just going to know the NFT name, right? You're just going to know it's a token, and you're just going to know what the token's called. Maybe you want to buy Uni or you want to buy Link or something like that, right? You're just going to know what those tokens are. And then the abstraction is actually going to go even further than that, where essentially you might not even know you're using Uniswap. It'll literally just be in your wallet that says swap assets, and it's not going to tell you what you're using. I mean, it can if you maybe enable some advanced features, but the simplest view of it will basically be, here, you can swap your USDC for some Link or whatever you want to buy, for some ETH, whatever it is, and vice versa, and then that just happens in the background, all instantly, probably gasless at that point, because the layer 2s might just subsidize it at that point, or maybe the wallet subsidize it because they take their own cut, and the gas fee is built into the cut that they take from that transaction, because for sure they're going to take the cuts here. I mean, the MetaMask already does this, right, with their swap feature, and it's a really great way for them to monetize, so they can just build the gas fee into that, or they can just like make it so that they have an off-chain kind of like set of market makers, like what CowSwap does or what Uniswap X does, or we call them searchers, that essentially do gasless swaps, but just build the fee into the price that they give the user. So all of this is background or back-end stuff that's not going to be shown to the user, and that's the way it should be. There is no way that most people are going to have, that we can expect most people to learn this stuff in order for mass adoption to happen. I'm sure there's going to be still tens of millions of people that know about this stuff, but if we're talking billions of people, most of them are never going to learn it, and they don't have to. They shouldn't have to, because at the end of the day, a good product, a good service is something that makes it as easy as possible for the customer to use. Now, of course, is there alpha in that? No, of course not. The alpha, the extra money that we all get to make from this ecosystem and the extra profits that we have, both monetary and social, come from the fact that we dive deep into this stuff. At the end of the day, let's go back to DeFi summer in 2020, if you knew how to read a smart contract, and if you knew how to interact with Etherscan, you were ahead of most people in crypto that already knew how to use, like Uniswap, for example, right? I already knew how to use a crypto wallet, because reading a smart contract, really, there's no reason for you to be able to do that unless you're a developer or an auditor. And interacting with Etherscan is very daunting to a lot of people, because it's the bare bones thing, right? It's bare to the metal, and especially running your own node to do that too. So these sorts of things, if you did them in DeFi summer, you made a lot of money. Like I have friends that did this. They made a lot of money because they could read the smart contract and know that they weren't going to get rugged, right? There was no backdoor in the smart contract, and they got into it at the start where the token rewards were the highest, and then if it got popular, they got lots of token rewards, they got lots of APY, right? And they were able to make a lot of money from that. But of course, the further out you abstract that, the less money there is to be made. But at the end of the day, like that's the speculative side of things. When it comes to actually making products and services that real users not real users, but like users can use for real world applications, for things outside of speculation, we have to abstract away all of that nonsense, right? It's not something that is going to scale to mass adoption. And I think it starts with terminology and expands beyond there and gets built into the tech. So yeah, I'm going to be trying to refer to multisig wallets as like group wallets from now on, especially when I'm talking to people that may not be as crypto savvy as me, or may not be a crypto native. Definitely group wallet makes a lot more sense there. But I think on that note, that's going to be it for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.